Welcome to the Friday edition of Tech Stocks Daily, where we unpack the juiciest moves on the NASDAQ that even your coffee can't keep up with. Today, we dive into Microsoft's mixed financial ballet featuring potential undervaluation and ambitious market moves. We'll unravel IDEX Biometrics' bold share consolidation strategy, a move hinting at strategic evolution. Then, jet off with Intapp as it conjures new growth spells by acquiring TermSheet, aimed at reworking real estate operations into a turbocharged digital dream. Whether you're plotting your next investment swerve or just want the edge in tech chatter, strap in as we decode the tech shifts steering today's market narratives. Hey tech enthusiasts, grab your popcorn because today's scoop is all about the technology behemoth Microsoft stealing the spotlight on the financial stage on the NASDAQ. Why, you ask? Well, it's got to do with an insightful market analysis that's caught everyone's attention. So, here's the deal. Microsoft's whirlwind tour through the stock metrics mall shows it in a fascinating light, teetering between being a Wall Street darling and occasionally causing investors to scratch their heads. The thorough company analysis of Microsoft, you might say, is making waves, especially with its industry comparisons. Let's dissect what all the hubbub is about. Firstly, let's talk price-to-earnings ratio. Microsoft clocks in at 30.73, boasting an enticing prospect for growth hunters. Why's that? It's significantly below the industry average, indicating potential undervaluation. Think of it like getting premium tech hardware on a discount day. It's still got the glimmer, but you might be paying a bit less than anticipated. Moving through the mall of Microsoft metrics, we stumble upon the price-to-book ratio, sitting pretty at 9.37. Again, not shooting through the roof compared to industry averages, treading in undervaluation territory. There's potential gold lying in those triple windows. However, the price-to-sales ratio throws a slight curveball. It's at a loftier 10.88, which implies some overvaluation in terms of sales compared to its peers. Imagine a sign in a store window declaring, "Fabulous, but maybe a tad pricey on the sales side." Let's not sidestep Microsoft's splendid return on equity at 8.17 cents, above the par line in the industry. Solid profitability? Check. Efficient use of equity? Double check. Now, EBITDA might sound like a fancy cheese, but it's actually quite powerful stuff, amounting to $36.79 billion for Microsoft, far ahead of its contemporaries in series cast. Couple that with a grandiose gross profit of $47.83 billion, and it's clear Microsoft isn't just sitting around, it's in the profitability driver's seat. Although, here's where it could do with some acceleration. Revenue growth. Microsoft's at 12.27%, falling shy against the industry's 13.07%. Maybe some nitro-boosted strategy could help in future escapades. Now, the debt-to-equity ratio is where Microsoft shines among its closest peers, showcasing a low 0.21. This numeric duo dance hints at a refined balance of debt and equity, a thumbs-up signal for cautious investors out there. What's the takeaway, you ask? Microsoft's sitting on a sturdy foundation with undervaluation potential in some respects, while nudging towards overvaluation in sales terms. But mix together high profitability with robust financial control, and you get a company poised for sustained robustness. So whether you're scavenging for growth gems or marveling at stalwart infrastructure, Microsoft is a mega cap giant you'd want to keep on your radar. Happy investing, Tech Tribe. Buckle up, tech enthusiasts, because IDEX Biometrics ASA made quite a splash today in the realm of biometric solutions. Let's unwrap what's buzzing with IDEX and why it's garnering so much attention. First things first, IDEX Biometrics ASA, if you're not in the know, specializes in fingerprint biometrics. Their authentication solutions scale across payments, access control, and digital identity. Pretty cool, right? It's basically making your fingerprint your ticket to seamless and secure experiences across multiple arenas. They're the proverbial wizards behind the curtain for card-based applications, rubbing elbows with card manufacturers and tech juggernauts. Today's headlines highlighted not one, but two significant developments for the company. Let's break it down. Share consolidation and new ISIN. During an extraordinary general meeting that took place on April 11, 2025, IDEX shareholders greenlighted several big moves, predominantly a share consolidation. If you're scratching your head over what exactly that means, it's essentially merging shares to reduce the total number outstanding, hopefully boosting the value of each. IDEX is consolidating 100 shares into one, with an expected kickoff on June 11, 2025. And if you're tracking stock via an ISIN, get ready for a change, because those shares are getting a brand new ISIN as part of this corporate reshuffling. Extraordinary meeting outcomes. The meeting was no small potatoes, with a representation of 268 million shares, accounting for over 32% of the company's capital. Everything on the agenda was passed like a breeze, including the critical share capital reduction. Post-meeting, IDEX announced an update to their share capital structure, dividing it into a whopping 3.83 billion shares, each with a modest face value of NOK 0.01. The official minutes for this fiscal powwow will be strutting online soon, allowing all stakeholders to scrutinize the tiny details. So why is this meaningful? Well, share consolidations often signal strategic transformations or preparatory steps for bigger maneuvers, including potential market expansions or entries into new segments. It can also reflect confidence in their growth trajectory by aiming to enhance shareholder value. IDEX's movements show they are pressing the turbo on strategic choices to possibly streamline operations, potentially appeal to a broader set of investors, or set the stage for innovative solutions on the near horizon. Whether you're a shareholder, potential investor, or just someone who's fascinated by cutting-edge technology making our lives a fingerprint easier, IDEX's latest initiatives are fueled by a vision of reinforced market positioning. As the biometric industry continues to burgeon, all eyes will be on how IDEX capitalizes on this industry goldmine by honing their proprietary empowering solutions. That's a wrap on why IDEX is making waves today. Stay tuned as we continue to track their journey. All right, tech enthusiasts, here's the scoop for today. The new spotlight is shining brightly on Intapp, the AI whiz and global go-to for solutions aiding professionals across advisory, capital markets, and legal fields. They're making waves by announcing an exciting acquisition of TermSheet, a Kansas City-infused provider specializing in software for real estate teams. Sounds fancy, right? Well, it kind of is. This seemingly strategic move is something Intapp calls an investment in better serving the cornucopia of firms in the real assets market. What that means is they are uniting forces to concoct what they're promising will be a hoo-ha-laced operating system tailored with the complexities of commercial real estate in its creative core. Erin Guinan, at the helm of DealCloud at Intapp, likened this mashup to that of assembling the real estate dream team of software experts. Her call of bringing together Intapp's DealCloud with all the wonderful bits of TermSheet vows to create a bubbling cauldron of a more potent operating system. So why join forces, you ask? The intention is clear. Capture, standardize, and gleefully use all that key data to accelerate life cycles and hoist deal executions to new heights. With a united front, Intapp plans to usher in divine convenience to the real estate professionals, serving them a tray of buttery smooth operations and power punch insights that'll fast-forward investment strategies. Add a dash of robot-style automation, a pinch of cutting down on tedious processes, and a splendid splash of market intelligence, and you've got yourself a recipe for improved returns and sweeping firm growth. A true make-it-rain kind of transformation. Split slightly in awe, TermSheet's Roger Smith and Sahil Ratan are equally jazzed to fold into the Intapp family, claiming the duo will accelerate innovation and craft new features with all the zeal and pizzazz you can muster. Curiosity piqued yet? Intapp plans to interlace advanced capabilities from both its DealCloud platform and TermSheet soon after the ink dries on the closing contracts. For those holding season tickets to either service, it's your lucky day. This tech goodness will become a part of your suite without burning a hole in your pocket. Expect some interesting webinars sketching the roadmap for the new unified solution. So here's the fun part. What's your take on this tech tandem? Think this shakeup will revolutionize the way real estate firms handle their business? Are you an Intapp or TermSheet client curious, or sharing your 2 cents on this brewing powerhouse team-up? Slide down to those comments and let's get a discussion rolling. Tell me, are butterflies tickling your investor Ouija board? Let's hear it. Let's jump into the stock analysis game. Let's hone in on Microsoft after a lively dive into today's captivating scoop. And remember, savvy listeners, always do your own research before making any financial moves. So is Microsoft a buy, sell, or hold right now? Drumroll, please. If I'm wearing my investor hat, I'd lean towards hold. Here's why. Microsoft, that tech titan we know and love, is showcasing a mixed bag of financial indicators. On one hand, you've got that juicy price-to-earnings ratio at 30.73, screaming potential undervaluation compared to industry standards. It's like discovering your dream gadget on sale. Pair this with the tantalizing price-to-book ratio at 937, and it shimmers with some growth potential without a skyrocketing premium. But let's apply the brakes for a moment. The price-to-sales ratio is leaning towards overvaluation at 10.88, hinting at a slightly steep cost on the revenue front. It begs the question of whether Microsoft's market valuation stakes a little too high compared to sales performance. Rev up towards profitability metrics, and it's quite the eye-opener. Microsoft's rock-solid return on equity at 8.17%, coupled with an EBIT of $36.79 billion, highlights a company dancing in the drizzling rain of profit. Talk about financial rhythm. However, let's chat about speed, and I don't mean your internet connection. Revenue growth is slinking in at 12.27%, nudging just below the industry's 13.07% average, an area where an extra jolt could be fancied for the future. Last but far from least, that downright appealing debt-to-equity ratio at 0.21 is Microsoft's polished trophy, showing a well-oiled balance sheet primed for steadiness without over-leveraging. So the long and short of it, folks, Microsoft is strolling majestically on a robust foundation, sprinkled with robust profitability and financial checks. Sure, we have indications of potential in the growth department, but there are also hints of a pricing beanstalk. Holding on to Microsoft feels like manning a comfy ship, thanks to its stability, awaiting strategic spark moves to hit the market like a storm in the clear. Investor buddies, do your homework. Dive into analyses, chart trends, and remember the golden rule. Your investment ride is your own, so make informed, thoughtful decisions tailored for your portfolio. Happy pondering. Today's market was a whirlwind of strategic shifts, with Microsoft teasing investors with mixed financial signals, a tango between undervaluation and lofty stakes, while IDEX excited the room with news of share consolidation steering their market spacecraft into new orbits. Meanwhile, Intapp geared itself to revolutionize the real estate tech landscape by bringing TermSheet into its ecosystem, promising smoother operations and strategic power-ups for real estate pros. Remember to like, subscribe, and share if you're vibing with these tech insights. Catch us again on Monday for more tech news goodness, and have a spectacular weekend.